Hey all, welcome to ShareTreck and welcome to this bonus video. I had promised to drop another video today. Our daily update is already online on the channel. I uploaded it, I think, a couple of hours ago. This one is going to talk about my portfolio and my plans, as I promised. And also, it's going to include 2 video clips that I think you need to have a look at so that you could relate to what my strategies are like. So let's get started.
And always good to see you. If cybersecurity, cyber risk is such a threat right now, why are so many of these stocks as a group down so much?
Yeah, and I think a lot of investors are asking the same question. I think it's one of the most mispriced I've seen a subset of technology in probably 6 or 7 years. I mean, I think in terms of cybersecurity, it's already a massive pocket of strength, about 20% growth that we're going to see. But when you look at the Russia-Ukraine situation, I believe it's cyber warfare that's already begun, and that could increase cybersecurity by another 200 to 300 bips across the board. So I believe we look back, this is really tip of the iceberg in terms of the threats that we're going to see over the coming weeks, months.
But what do investors think they see that isn't there? In other words, why would they be taking these stocks down to what you describe as mispriced levels?
Yeah, I think there's just such a risk off here in terms of what we're seeing across tech that you're just seeing so many sort of hit the sell button. And I think I understand, in terms of the broader risk off, but when you look at cybersecurity, I mean, even what we've seen throughout earnings, look at Palo Alto last night, I mean, we are seeing as robust strength as we've probably seen in about a decade. And now it's just about to get stronger. The vast majority of cybersecurity attacks come out of Russia as well as the Eastern Bloc. So you look at what's happening here. This is really, from our conversation, CISOs within the Beltway and even, in Tel Aviv, this is the start of what I believe is just going to be an explosion of cyber attacks.
So as you saw in the last clip, that was Dan Ives. I follow Dan Ives. He's always had a great insight, especially on the technology stocks and EVs. So what he said there does resonate with us with regard to the CRISPR shares, because we are in a risk-off environment, and even though CRISPR technologies and a few other shares have got a lot of promise, the market is risk-off. So that's the parallel that I can draw. And similar to what is happening with cybersecurity, there are cyber threats, and we need cybersecurity, and yet cybersecurity firms are losing value in the market. It is something similar to what we see with CRISPR and the potential of CRISPR, and still CRISPR losing value in the market. So that kind of explains from another expert's point of view why good shares are dropping in this environment, despite having good prospects and good background. So that was one thing I wanted you to have a look at.
Afternoon, talk more about the geopolitical tensions we're seeing. Tom, good to see you again.
Great to see you, Carl and Morgan.
You've said in prior times of stress that it's not a good time to be a hero. Is this one of those times?
Well, I mean, it's been a very difficult setup for markets, because we were already seeing markets struggle with inflation and Fed hikes and rising rates, and then now we have a real escalation of geopolitical tensions. And that's correct. It's tough to be a hero, but I think investors are on that sort of cliff edge. And I do want to just, encourage people. This is a good risk reward moment for stocks. I know it's kind of ugly today, and it's been a very ugly few weeks, but I would still sort of lean pretty hard into this and say, this is not a time to be selling stocks. I'd rather be a buyer here, even if there is potentially some downside.
I was going to say, it sounds like your view for the first half in general is somewhat treacherous before you see the markets improving in the back half of the year. If you were to get in around these periods, you'd be in for a few months of where it would demand you to be patient, I guess.
That's right, Carl. I mean, I guess, in December we thought, it would be very difficult to make money in the first 6 months of this year. But now we're in February, the market's down 10%. I mean, I think the one thing that we all have to ask ourselves is, how much more bad news can happen between now and the end of the first half that would push stocks down. And this is where I'm really starting to think that maybe a lot of that downside that we thought would happen sometime in the first half, down 10%. I mean, we're already pretty much here. So, I know we're in a buyer strike, and I know investors are nervous, and nobody wants to see global conflict and deaths and civilian casualties. But at the same time, we should also just even look at what the market's telling us. I mean, Ukrainian stocks are actually outperforming, and they've outperformed for the past few days, even as Russian stocks are underperforming. So from that perspective, I almost would say a half full glass perspective that it may not be as bad as we think.
In the second clip, we had Tom Lee, who's been quite bullish. His forecast earlier, I think at the end of last year and beginning of this year, was that this year is going to be a volatile rally. So that's the term that he used. So basically what it implies to me is that there'll be volatility, but the general trend will be upward. So there'll be plenty of chance to buy at the peak and drop and sell at the peak and buy at the bottom. Those kind of opportunities. That's what I was visualizing. So what we heard from him in the clip basically is that how much more can it fall, and it needs to turn somewhere, and probably we are at the stage where we should not worry about catching the falling knife, but instead we need to start buying. So I must confess that part of that that video clip and my own analyzing of what he said and what I know made me buy a little bit yesterday, but I have instantly regretted it, and prices have dropped further. So now let me show you my portfolio, and we'll talk about it along with the portfolio. So here it is, my portfolio, and this is the total value at this point of time. Unrealized losses, and this is the value of the portfolio. That is in US dollars, and sorry, this is in Canadian dollars, and this is in US dollars. And as I mentioned, I do have a whole lot of these blue chips in the Canadian side. You have Apple, Amazon, Salesforce. I have multiple accounts. I've consolidated it all together. That's why you see multiple entries for the same stock. So I have Amazon in 4 different accounts of mine, and these are the average cost price and the book cost. So yeah, the portfolio is in red except for this RioCan out here. It's a real estate investment trust, and it gives me really good monthly dividends. And I'm often tempted to sell this, book the profit, and put the money into other shares. But I have done that from the beginning of January, and this is the residual balance of my RioCan. So I'm going to hold on to this for a while until I'm sure that the market has turned around. So I'm not going to touch it. That's part 1 of my strategy, that I'm not going to touch that. Continue getting my interest. And out here, if you see, I have got ARCG. I have got Bank of Ireland. This is a very, very old holding of mine. This is almost, I would say, 12 or 13 years old. There was a big crash for European banks, and the Bank of Ireland suffered very bad. So I decided to hold it long term. It's now improving, but it's a long way to go. So a bulk of my losses are coming from there. If you see 15,000, it's been with me for almost more than a decade. So this is a long-term hold, and I'm not going to sell it. So out of this 59, you can take out that 15. So we are around 44. Is that 44? Yeah, around 44,000. And the other holding I have is Citigroup. I sold it this morning, and I'm holding on to the cash. And I booked the loss. So I'm attempting to do a bit of tax harvesting so that this loss can be offset against gains when it comes to the end of the year tax reporting for 2022. I'm holding that cash so that when the market bottoms out, I can pick it up when it's on its way up. So I'm going to be very, very careful going forward. Coinbase, again, is doing bad. It's linked to the fortunes of cryptocurrency. So if cryptocurrency comes up, this is also going to jump up. Likewise for Marathon Digital. It's also in a very bad situation as far as my portfolio is concerned, averaging to around 50 or 55% of losses there. lost almost half of the value. PubMatic is another company where I think I've lost 30% of value. And this is the global NASDAQ covered call ETF, QYLD. Yeah, I believe in this stock. I'm going to hold it. If I get an opportunity, I might buy a little more. It's likely to bounce back very strongly. Of course, I have this Tesla, around 37 shares of Tesla. So, and Wipro ADR, it's an Indian IT company. So I have a small holding here. I have a major holding on the Indian side of my portfolio. But it's a pretty good company. Eventually, it has to come up. It's down only 15% overall. So I'm happy about that. So, so here we are. That's the US side of my portfolio. And this is the Canadian side. So I have got Apple, Amazon, Salesforce, which is CRM, Alphabet, Microsoft, Netflix, PayPal, Ryokan, and Tesla. So all these holdings of US companies like Apple, Tesla, and all, it's coming through Neo Exchange, where CIBC has got a hedged product. So when I buy Apple on the Neo Exchange, this particular script, it is hedged for any exchange fluctuations between US and Canada. So I'm playing purely the appreciation that is happening for the stock in the US without attracting any foreign exchange risks. So that's what we have here. So this is the status of my my portfolio. And in terms of cash, I got 4,015. So out of the 10,000 that I infused last week, I used up around 5,000 to 6,000 buying up Apple, Tesla, and Google yesterday. So the balance is 4,000 here. And as far as the cash in USD is concerned, I sold Citigroup today. And so around $6,000, $6,400 worth of cash is there on the USD side. So now it's a question of timing. So I'm going to wait for a few more days. I'm going to continue watching the indices go down. And once there is 2 sustained days of uptrends, then I'll start looking at the MACD and the RSI and the VXN and also all the news reports that are coming in, and then decide whether I have to start getting into the market or not. Because we have dropped so much that I'll have plenty of time to grab any good share on the way up. Maybe I won't make 40% gains. I may end up making 20% gains. But in any given year, a 20% gain is like really, really good. So I'm okay with that instead of losing any further capital. So that's where my portfolio is, and that's what my strategy is. And you have seen those earlier 2 clips which influenced my thinking and my own rationale that I gave to you. So let me know what you think about this and put your comments below, and let me have your point of view. While we are here, just let us have a quick look at the VXN. You can see that the VXN is dropping now. You can see it here. It is dropping. It's dropped almost half of the peak that it had gone to today. And as a result, the NASDAQ is showing a little bit of improvement. And if you look at NASDAQ, let us see the trend lines develop. It'll just take a few seconds. Yeah, here we are. So the earlier supports are still holding. And you can see that we bounced off the support at 12,599.36. And we went up, and now we are being constrained by the 9-day EMA. The MACD is turning to be bullish, and the momentum is picking up. So I think, contrary to what I mentioned in my morning video, I'm starting to think that probably the direction has changed for the day, and we may end positive for the day with even our biotech shares. Let us look at our biotech shares. Let us take a quick look. Yes. All the shares are looking good. Now if I'm going to sort this, and you would see that all the shares that were in red, the numbers have reduced, and IMTX is the latest one which has come to flat. So everything is looking good right now. We have to probably assume that the market has reconciled to the fact that the Ukraine-Russia tension is not such a big deal as far as impact to the US markets is concerned. That could probably be the reason why we are seeing this change. Or it could also be a dead cat bounce where everything has fallen so low that investors start thinking that it can't go down any further, and they decide to buy. And when they buy, the prices go up, and the others who are waiting to dump their shares to hold it on the sidelines, like I am doing, to hold the cash on the sidelines so that if it drops down further, then they can buy lower. Those guys will start selling at that time. So it's kind of a whiplash effect, in my opinion. So that's what we are going to see in the market going forward. And that's also defined as volatility. And that's what we measure in the VXN. So that's my 2 cents for today. Thanks for watching this video. And if you're watching the videos regularly in this channel, please consider subscribing. And if you're new to this channel, please subscribe. It's absolutely free. And we'd like to have you here. Thanks and have a great day. Bye for now. See you next tomorrow.